Kalispera Anthropos, welcome everybody to O Economica, all about economics and finance. And I'm super happy to be with you all today. And it has been a very busy day doing a lot of work, preparing some products. And I also, in the morning, I came across the ECB conference, annual conference, on money markets. I came across on the internet. I watched a bit of the conference and all the academics, researchers that work at the Fed and all the financial institutions. They were presenting their papers. It was amazing. I will be reading the papers with a lot of interest, but a lot of energy to learn all those concepts, which are really incredible. And the content of today, if you're not around here, subscribe, follow this channel. I will activate the bell so you will know when I'm uploading any video. And now we are going to, because we are in the afternoon here in Europe, going to the end of the business day, and then there is the stock market going on in the United States. I want to focus with very simple things around gold, because I've been observing. I uploaded some content regarding the possibility of a short-term gold price retracement, and I've been watching the price action. I've been doing some more not so in-depth research, just notional things, that the futures contract, the futures market, and something around the actual physical production of mining gold, for how long we're gonna have mining reserves, if those are viable or not in economic terms for mining multinationals. And so we will get into this topic of gold prices, gold futures. So stay with me here at O Economica, and I want to show you something which is the point of my other video that you can go and watch, which is the ultimate edge for any investment portfolio. I did a lot of back testing, and I found out something that anybody knows, which is gold. It's a very important asset to have in any portfolio allocation, because it's a huge protection against inflation and against stock market drawdowns. Okay, because the beta of gold, hence the correlation, the volatility, when the market goes down, the beta of gold is approximate to neutral. So the market goes down, but gold doesn't move. And the proof of concept is that the market, it's all in the red. And I uploaded go and check my new content, the latest content, where I'm saying, beware, we are going to have a rolling correction starting in November, going through in December. We're gonna have a small bear rally for the Christmas season, and then the rolling correction will roll through January, February, and March next year. But the most important thing to see for all people who have savings in ETFs, or they check the market to see what's going on. Very, very simple. All institutional investment funds, they are selling, because the stock market, equities, stocks, like the most hot stocks like AI, bubble, and things like that, they are too pricey. But what is doing gold? Gold, it's green. It's holding at 4,000, and it's marginally gaining. Okay, so that's why the video that I put together, the content, the research content that I put together, go and watch my video, the ultimate, portfolio edge for gold. And I did a back test of all the, for 20 years of data for market prices for the S&P, all financial assets compared with gold. And I found out that gold has a very neutral beta. It does not suffer of volatility correlation with the stock market. And so now the market, it's red, yeah? And gold, it's holding at 4,000, okay? Now I will show you briefly, bear with me 1 second, if it loads it. Okay, that's my channel, subscribe, okay? And that's the video. The ultimate portfolio edge. I did backtest gold. Go and watch the video, and you'll understand. There are also chapters, so you can click on the chapter that it's interesting for you, subscribe, and you will I will give you as much content and knowledge for what is my level of knowledge as I can, to help you all understand why there is volatility in markets. I'll try to guide you in what can be the stock market cycles for investment, which asset classes are more volatile, more dangerous according to periods of the year, and I will explain you a lot about macroeconomics, so fiscal policy, monetary policy. For what this is, the content is all free. It doesn't cost you anything. Subscribe. Is very interesting. And so, again, topic of the day: the market. It's red, gold. It's holding. So it's very important, and because I have been observing these things from my humble position, if we see here, these are the gold futures contract, the futures curve, okay? So we see here the cash, so the spot price, today it reached a price of $4,014. This $4,014, it discounted the opening price up to almost between January and February 2026. So the spot price, it was already buying into the futures curve. So even though we have a reasonable pullback in the price action, which is meant to form a zone when there is we are clearing the super rally that we have towards the 4,400, yeah. With this pullback sitting around 4,000, we see that we are forming a sort of bottom, okay, a range. This is the range that we are, okay, this very tiny range, okay, and this, let's call it technically a double bottom, okay, or a W shape. And if we match it up with the MACD, we see that the curve is turning, okay. So setting aside the technical indicators, which if we draw some Fibonacci retracement, we see that we are discounting this kind of retracement, the 0.61 retracement, or if we zoom it out for a larger period, 0.78, according to from where we start the Fibonacci retracement, we are at some, let's call it technical levels, which match together the Fibonacci retracement starting from here, which is February 2025, or from here, September 19, this area, or even longer here. So we have a convergence, technical convergence, also in the Fibonacci sequence, which technically from a technical charting, technical observation point, it can give us more comfort that for those market players who emphasize a lot the technical indicators in the chart to decide from how to understand the price action and to eventually place their trades or do whatever they want to do. So we have a double Fibonacci retracement level, which tells us, okay, we are around the 4,000. It's a very critical level, although it's also because it's 4,000, it's a round number. So the positioning also of large investors, it has been holding at 4,000. But the most important thing, it's the market, it's totally red, and it's gonna be red for quite some time, but gold, it's holding, okay? So another thing which is more interesting, and setting aside all the speculation, okay, let's complete, okay, the speculative part. Although this is more technical, if we scroll down the futures contract, the futures curve, we are going up to $4,800. So the futures curve is technically in a contango. This means that futures prices, they are higher than the spot price. Okay, it's a normal sloping curve. Let's see if I can brush it out somewhere. So that's the futures curve, okay? Long in the futures, we have higher price than the spot price, okay? And if we zoom in here, right, these small colored bars, these are the front contract, which for sure we have the 2026 futures contract here, which are priced already marginally higher than the spot price, and we have the contango of the futures market. So also the futures market, it expects higher prices in the future compared to the spot price. We are not in a situation of where we are in a contango, or sorry, in a backwardation, but the curve is actually in a contango, so we have higher futures prices. Okay, so technically the market in the next 12, 24 months, it's pricing higher gold prices in future. And that's important, again, because gold, precious metals, they have this good quality of being an asset class, of protecting any investor from equities volatility, from stocks volatility, from bubbles in the stock market. You have safe gold or silver investment, even copper. It's a very important industrial metal, which I would suggest should be part of any investment portfolio. And because copper reserves, they will end. So now, switching to the mining, setting aside the financial speculation, so the financial market, there are physical resources limits for what is the gold mining reserves, also the copper mining reserves. It's estimated that if you search simply around on Google search, around the internet, on Bing, on whatever you use, you search for how long they're gonna last, physical mining gold reserves, even copper reserves, they're gonna last for the next 40, 50 years, maximum 60 years, but it is not certain. So the situation is that we have the largest gold mines, which are mostly based in South Africa, which are projected to stop production by 2030, 2032. And these are the Kloof gold mine, the Driefontein gold mine, the Mponeng mine, some strange names, Shepong mine, and the South Deep gold mine. The South Deep gold mines, these are gold fields which will last for the century, but the Kloof gold mine, the Driefontein gold mine, and the Mponeng and the Shepong mines, they have, according to their estimates, the resources, the gold mining resources they can access, these will last up to 2030, 2032. So what that means is that the supply of physical gold will be in scarcity going forward in the next 2 decades, 3 decades, 4 decades. And that happens also in cases where these mines, which have very complicated mining operation, they go deep, 7, 10, 12 kilometers beneath the earth's surface, and going at some point they find that going even deeper, it becomes uneconomical to extract gold, because the quality, the grade of gold mineral and the quantity that they can extract and make it pure gold, it's uneconomical. It's not enough. It means the cost of mining exceeds the quantity of gold that they can extract and produce and generate a profit for the industry to keep working, to be operational. So there are these two main factors which are operational factors. One is limited resources. We are not used to this concept, because the society we live in, we do not fathom. Our brains, they are so dumbed, they are so shut down that we do not accept the fact that planet Earth It's a planet which has a limited surface because we are on a on a sphere, okay, and there are limited resources, okay. So the quantity of gold mineral that we can mine, that we can extract from the surface, and also the quantity of copper, of grade copper that we can extract, those resources are limited. And copper is the most important industrial metal that we could ever think of and create. Because copper is everywhere. Okay, it's like David Copperfield, but copper is everywhere. Copper is in Tesla motors, okay? To have the magnets, the electric motor, you need copper. Copper is in your smartphones, your mobiles, Androids, Apple phones. Copper it's in wires, it's in computers, it's in quantum computers. And copper, it's irreplaceable. We cannot create synthetic copper, and there is no substitute industrial metal which can substitute copper. So basically, we are potentially the tech industry. It can potentially hit a ceiling. There's no way when in 40, 50, 60 years time we will have exhausted all copper mining resources, which is in Chile or in Australia and other parts of the world, as well as gold mining resources. There is no way we can produce iron grade copper. We can recycle it. Okay, we can take our old, SIM, like memory, computer chips, all that kind of stuff, memory SIMs and stuff like that. We can scrape some industrial gold, or we can recover copper from other industrial material which has been used as garbage. Okay, but we will not be able to mine copper any longer in 50, 60 years time, okay, for sure by the end of the century. So that means that the production of all technology, consumer products, and also durable goods will hit a crisis point, a huge crisis point, because we cannot, up until now, we cannot create synthetic copper, and it's an industrial metal which is irreplaceable, and it does not have any substitute. So it's the demand for copper is totally inelastic, okay? So there is no way, there is no substitute goods that can be utilized in industry as copper. We can, for some processes or production of some materials or some goods, we could utilize aluminum, but not in everything. And aluminum, it does not have the same physical properties as copper, like as a energy conductors, like electricity conductors, also the heat, the heat function. I don't know how to describe it because I'm not, I don't know everything. I'm not like a well of science, but copper also has it keeps heat within its structure. Okay, so and it's a good conductor. It's the best conductor that we have of energy or electricity. So two forms of energy, which is heating energy and also electricity. But we don't have other substitute material that can substitute copper. Okay, and so these are the critical points that I see humanity in a whole will have to confront with by the end of the century. But I think that will come way before. By 2050 or 2060, we will start to see at least those multinationals, which can be many Australian multinationals, are in the mining sector. They use the geologists, they use specialized personnel who do research and try to find out, and they are estimating that gold mining resources will start to shrink by 2030, 2032. No, I'm not doing any scaremongering. I invite you all to search on the internet and do the of course the most rational and useful research for you to gather knowledge and to come to terms with the fact that planet Earth, nature, it has finite resources. Okay, natural resources, they are not unlimited. So I know I'm diverging, and I will stop here. We face, I'm not doing a climate disaster, but we must be rational, and we need to understand, which is it's crucial. It's a crucial point. The economy is the study of how to allocate the best possible resources which are finite. Okay, there is a limit to the resources that we have. How do we utilize those resources to have the best productivity and to have the best outcome in terms of health, wealth, and well-being for the whole of humanity? Okay, so this criteria, which is a natural physical limit of the natural world, and we are human beings, we go through a cycle. We are given birth, we grow up, we become adults, we reach a peak, we reproduce, and then we see the sunset of our life. Okay, so everything starts, peaks, and ends, right? So everything has a limit. We can no longer, and I'm not saying now, or we can no longer presume that we can live according to infinite growth, exponential growth. It's a nonsense. It's a total violation of physical law of nature. We must not accept the idea that economic growth works on exponential growth. That's a no-no, okay? Because anybody can understand that natural resources, they are not infinite, okay? And it's very simple to see when you go to the supermarket, you see that the groceries prices, they are rising and rising and rising. One, it's corporation seeking extra profits, and so it's greedflation. The other one is that there are limited resources, and so the cost of production tends to rise. And there are parts of the world which do overconsume and do waste a lot in excess, okay? And there are many other parts of the world which underconsume and they starve to death. So this whole construct is totally wrong. It will bring us to ruin. And even if we refuse, there is no way, we reject the idea to use our brain to understand what is nature. Nature will teach us what the lesson, because we cannot go against the physical law of nature. Okay, we cannot go against gravity. If an apple falls from the tree, it's because there is gravity. There is the gravity force, the acceleration. Okay, so natural resources, they are limited. And gold, as it happens, we cannot extract gold from the hard surface at the infinite, for an infinite amount of time. No? Gold, it does not last in eternity. Copper, it does not last to eternity. Those mining resources, they are finite. And I don't know how we are going to sort it out with all these technological apparatus that we are creating and we are building. And it requires more and more and more resources. And every person, on average, every human being on the planet, it has something like 2 or 3 smartphones. It's mad. Yeah, it's consumption to the maddest level. Okay, it's consumption towards assured distraction, because we will not have enough material to produce at this scale. And so in that comes my conclusion that eventually, when a material and resource it goes towards scarcity in a long period, 20, 30, one generation, two generation, okay? Although some gold mines, they will stop to be operational by 2032, okay? And you can go and research it by yourself about what are the estimated lasting resources for gold miners, and when they project, the mining companies project that their operation, their industrial operation will not be viable anymore. So I'm not deciding for me. I will love to know that mining operation will be viable until the year 3000, but I cannot just live with 2 slices of thick bacon on my eyes and tap my ears and basically ignore everything. The mining company, they are well aware that their business model will be viable until 2030, 2032, because then there will be nothing to extract, or will be totally unviable. Okay, so for that means that potentially gold prices will have further upside, because when something is scarce in supply and the supply diminishes also in future, then the material, it becomes more precious. Okay, so I don't know, but I'm sure that from where we are now and seeing the price action, I could expect that the price will go higher towards even 5,000. I'm not saying that that happens tomorrow, but by 2030 gold can be at 5,000. Okay, and so on a longer horizon perspective, any investor needs to be aware. Now I'm basically posing a question to you all. Okay, if you go and do some research, you'll find out that copper, the material that we need to generate all sorts of electronic device, smartphones, EVs, electric vehicles, even normal cars, because they are, even the internal combustion engine, those cars, they are full of electronics, F1 cars, electric Formula 1 cars, and stuff like that, and computers, quantum computers, scanners, MRI scanners, you name it, copper wires, I don't know, rotors for trains, anything in the industry, it needs copper. So when in the next 50 or 60 years we will not have any grade copper as a mineral to extract, how the hell we're going to survive? The economy is going to work and to generate economic growth. And so if I would make a long-term bet, I would have in my portfolio gold, I would have in my portfolio copper, and I would be very, very wary of the tech sector, because those stocks, they are very, very pricey, and the market, it's all in the red today, and gold, it's holding. So this confirms the fact that my research, I did not do the video and the portfolio hedge as gold in vain. There is actually very good, it's a very good content, and I invite you all to watch it and subscribe. But my message for you all today is be aware that natural resources, gold, copper, mining resources, they are limited, and they will start to decrease in supply by the end of the decade and going forward, 2040, 2050, 2060, even by the end, I don't know, I will not be here by the end of the century, but my message is also for future generation, for the next generation, for the younger people. You all have to realize that the economic model of infinite economic growth, it's a fallacy, because you go against the physics, the natural law of nature. Okay, and remember that the Greeks, ancient Greeks, they had a word to call Mother Nature or nature, and they call it physis, from which we have the Latin word or the English word of physics. Okay, because the Greeks, they saw nature and they call it physis, because the first law of nature, those were the first law of physics. Like Archimedes, which discovered Eureka. He put his bum in the bath, and he saw that the water in the bath went outside the bath container. Okay, and so if you put a body in a liquid, then the volume of the liquid increases and you have the liquid overflowing, so there must be some equilibrium between the surface of the body and the underneath liquid, and so Archimedes realizes that ships can they can float. Okay, so it's by observing the physics, nature, that we begun to understand the physical world. And nature, Mother Nature, it has limited resources, and so limited are the gold mining resources. And for that simple reason, although $4,000 is a very hugely expensive price, it's a hugely speculative price, but in a horizon of 10, 20, 30, 40 years, I reasonably expect, unfortunately, the gold prices will be even more expensive, because there will be the same demand even for jewelry, for the normal gold and the jewelry industry, but the availability of the metal will be less and less and less. We will have less supply, even to do jewels and to do wedding rings or engagement rings. No, just something as simple as that. That's it. And if we put all dots together and we see the futures curve, the futures market is already pricing 4,800. So it's by June 2030. Okay, so there is a rationale by the fact that gold miners, they will not be operational by 2030, 2032. The futures market, it's pricing already higher gold, 4,800, 5,000. And gold, it's holding today. Now it's 1%. When I started recording the video, it was 0.4. And the market is tanking. So what it actually has real value, it's precious metal, it's real hard stuff. Okay? And with this, I will love you and leave you all and think hard. Realize that natural resources on planet Earth, those are limited. We need to understand it and change our framework of thinking, accepting that Mother Nature, it has limited resources, and we cannot presume to live for an infinite exponential economic growth model, which it doesn't work. It's a fallacy. Even in the numbers, it's a total wrong, non-scientific, non-physical theory. It's wrong. We cannot have infinite exponential economic growth. And so when you hear all these numbers that AI, it has exponential, the market size is 1 trillion, 2 trillion, that's all inflation, that's all bad debt. Don't believe those things, because it's rubbish. And good luck, and get some gold if you can, and enjoy the weekend.